as method based on pure price and Fibonacci only, and method applies to any instrument and any time frame. So please do spend time reviewing US government required disclaimers. And my favorite part of the webinar, please prepare the instrument and time frame of your choice, and I look forward to answering your questions. Simply post, for example, Apple Weekly, Euro 4-hour, Dow 5 minutes, and I will show you where I see price heading, where I see reversal points, where I see exhaustion levels, and so on. So, let's start, shall we? Alpha Wave Trader method uses no software of any kind, no indicators of any kind, simply pure price action. Every single trade I take in the trading room, I take based on using market structure only and exit using Fibonacci levels. For example, this morning we came to the markets seeing extremely clearly that bearish trend was getting very tired. So it's extremely important to recognize where reversal zone is. And this level is spelled out by the price at the trend inception. All you have to do is apply 4 critical rules and you will know extremely well where the reversal zone is, which identifies Alpha Wave Trader proprietary Fibonacci levels that show you where trend exhaustion level is. So that was our short on oil, and that's where it ended. And as I spelled out in the room, don't be fooled. In order for me to respect this bullish push to the upside, price too has to break through this level. The end of the minor trend to the upside is here. This is the most important level in the market, and all spelled out by the price, and it doesn't matter if it's Apple monthly, if it's oil 8 range, if it's S&P weekly. Very critical to know where these levels are that form the most powerful levels of support and resistance in the market structure. So why do I choose not to use any indicators? I used indicators forever and ever, and I worked on developing multiple various softwares, only to recognize that every single indicator in the market works after price made its move. And if you found indicator and software that works, stick with it. It's an exception, it's not the rules. Because if there is indicator that works, it works only on a particular instrument and a particular time frame. And very important, if you found something that works, recognize and stick with it. So here's a typical formula how indicators work, and this is typically how I worked with software developers until 2008. When markets were crashing left and right and no software was able to do anything because the most powerful fundamental structure was completely broken. And that's when I started focusing and recognizing that when price contradicts fundamentals, it will always win. Because every single indicator that exists in the market looks at how the market behaved after the fact. No indicator on the planet will tell you how the market will behave in the future. If you come to the social media and you will go back a few years ago, you would see I've been projecting since 2009 that S&P is heading to 2000. Price told me that in 2009, just like price is telling me that every single time the historical high will be broken, S&P will eventually make it not just slide until 2000, it will make it all the way to 2100. But the reason why we did not trade S&P this morning in our trading room is because bullish trend is way overextended. That's why it's been extremely sluggish move. And because the levels I had been posting on Fibonacci forum and social media, the same level we had been watching on hourly since early July is finally broken. This was the most powerful level, 1976-75, 1977 area. And price spelled it out since early July on hourly and since 2009 on monthly. Formula remains the same. And here's an example from July 15th, where we were shorting S&P from 1974 level. And all of these levels you can witness and see on the Facebook or Fibonacci forum. And that's the magic of the price. That price spells out all of these levels far in advance. And this is the levels we used for entries, stops, and targets. Here is one of the most popular indicators, was my favorite indicator of all times, moving averages crossovers. Fabulous, marvelous, amazing, and very powerful trending markets. What happens when market goes into correction? Ouch. Market goes into correction 30 to 40% of the time. By the time you take long, price is showing you to go short. And it becomes very, very challenging 30 to 40% of the time. So for example, let's take a look and let's see what played out on oil when oil came to reversal zone on the latest bearish structure in overnight markets. Initially, oil had given only bullish corrections. And this was a phenomenal buy point at reversal zone. But no indicator on the planet will tell you, stay out when priced in the correction and enjoy extremely powerful rally when price tells you so. It's all the same formula, and it doesn't matter if it's oil hourly or if it's euro weekly. I have been projecting forever and ever and ever that euro is heading to 3400. So this is what I've been projecting, and don't be surprised if euro will finally make it to 3400 sometimes in the month of August. But this is a magic puzzle. The end of the minor trend will forever remain the most important level in the market structure. Again, all the levels you see here drawn since 2012. Decision point 1 that was respected in 2013 on Euro Weekly expected to be respected in August 2014. And that's the magic of the puzzle. This is the end of the minor trend to the upside, the end of the minor trend to the bullish rally where price struggled forever and ever and ever. And this is the end of the major trend. That's the difference. A world of difference. We always have minor trend, and that's what I expect euro to do. Euro will take a major pause and potentially will stage pretty powerful push to the upside at this level. If 3400 is broken, euro will continue very powerful collapse all the way to 3200 and all the way to 2800 area. But this remains key level. And all spelled out by the price since 2012. Simple. No indicator on the planet will ever let you know that. And that's why I can't be more excited about Fibonacci Bootcamp that we're starting on Monday. So I look forward to your questions. We can talk about that later. So here's a screen of one of my mentoring students who came to me after 20 years of trading. And he came and said, guess what? I'm very lucky. I'm at break even 20 years later. Woohoo! Why is that? Let me take a look on your computer. Let me take a look at your charts. Let me see why it took you 20 years to end up being break even. And here's the answer why. Can you count how many indicators on this chart? I lost the count. I stopped at 9. There's actually 16. No trader on the planet can be focused making rational decisions paying attention to 16 indicators. Very, very important to recognize that all of these indicators mimicking what price did after the fact, and the poor price that marked by all of these arrows completely ignored. And that's extremely important fact that recognizes evolution of the trader. To recognize magic happens if you remove all the indicators and you see how easy and clear and marvelous price really is if you play by the rules. And if you knew that, you would know extremely clearly that oil reached the end of the minor trend in overnight markets, reminding you what the most important level is in the market structure, the end of the minor trend. Extremely powerful exit if you had opportunity to buy oil at 102 area. Oil struggled here enormously for a number of hours and continued drastically further up to decision point 2. That's a stepping stone, and that's exact same dance price does on every instrument. So this is all you will ever see in the trading room. I know that traders prefer black background and gray background, so every time I go into a mentoring session I see gray and black charts, but all of the girls prefer white, plain vanilla. That's the reason why S&P had been such a snoozer. We do not buy at the end of the trend. The buy point on S&P was 1962, 1964, and 66. If you're buying here, you're buying at the brick walls. Don't expect much until you will get a powerful pullback. And that remains the key. So in a nutshell, that's it. It's that simple, and it's all based on Fibonacci. And I must be frank that years and years later, it's going on 20 years, it's not 15 anymore, since I started going from investor to position trader to full-time technical trader and analyst, that I recognize that there is so much more to this puzzle. It is so beautiful, it is so powerful, and it is so easy to see if you just play by the rules. And that's why every time I pull up any of the historical archives, I see that price just keeps confirming that same marvelous dance. Look on gold. Posted very, very long time ago. What did I say? If gold will break to the upside for till 11, this bullish rally remains very weak. And gold had done exactly that. So it is all the same formula. Take a look on dance on gold weekly. What has price started doing when it came to reversal zone? So if you were shorting oil from gold from a couple of years ago, you would completely expect to get out. And this was our blast trade at OFOMC that's posted on my blog and YouTube channel, where you can review multiple trades. And that's the magic of the price, and that's the power of Fibonacci. Nothing else is used. Price is free, and so is Fibonacci tool on every platform. So Fibonacci is a concept which was brought to the fore by Italian mathematician in the early 13th century by the name of Leonardo Pisano. His works and findings are truly incredible, and he detailed a number sequence which affects our everyday lives. Believe it or not, but when you look in the mirror and you see your reflection, you see Fibonacci. When you see the flowers and you see amazing symmetry, you see Fibonacci. When you look at price and you see decision point 1, the end of the minor trend, respected on euro, that I project will be respected in August, you see Fibonacci. Very, very important levels that create the symmetry in everything that surrounds us. And it's all done by this magnificent formula. that creates this expansion that starts from 0 and goes exponentially. And this is all we use. And I only trade Fibonacci numbers, nothing else. That's all that matters to me. No random numbers. So here's pretty much what we teach in the course. Here it is. It's all in front of you. Just obey 4 rules. Trade wave 1, trade wave 3, stay out at the end of wave 3. Walk away from 2 and 4. 2 and 4 are corrective. Simple. Nothing less, nothing more. Can you obey those rules? You can trade anything. That's simple. But these are key rules that we are teaching in the course and will be going over and over in Fibonacci Bootcamp that starts on Monday. So here's a classic examples, few more examples, and I look forward to your questions as it's always the most exciting part of the webinar. So let's take a look what happened on NASDAQ. Reminding you, if you know the inception of the trend, you have advantage to buy at the very inception and enjoys the rally of the wave 3. This is major trend that formed the very classic 5-wave formation. That's it. 5 waves are done, price collapsed, major trend is finished. Because major trend forms in 5 waves, minor trend forms in 3 waves. It is that simple. And it's all spelled out by the price at the trend inception. And here's an example of ranging markets which occur 80% of the time and respect Fibonacci levels highly. And when you go into the trending markets and you trade something as powerful as DAX, which you can listen to the audio testimonies, you can listen what amazing Catherine is trading. The most powerful trader I've ever met. She finished the course and she trades DAX. And DAX trends 90% of the time. It's the beast of the indices. Still respects Fibonacci levels. Simply has drastically more powerful volatility. And this is exactly the pattern I'm referring to. Wave 3 will forever remain the most powerful wave in the market structure. Enjoy the ride, and if you in the market structure at the end of wave 3, walk away. Trading is pretty serious business. Playing by the rules remains the key. The same exact rule applies when price goes to the downside. It is exact same wave that price respects. We always have wave 3, most powerful wave in the market structure. And pay attention to what happens if you're acquiring short at the end of wave 3. Nothing good happens, ever. You're acquiring a position at a reversal zone. This is exactly what happened to those who shorted oil today at that level. That is the end of wave 3. Very dangerous trading if you start acquiring trend positions at this level. Again, the same exact formula as Euro Weekly. Very bad idea if you start buying at these levels. Monitor for trend reversal, not acquiring trend position at the end of the major trend. So here's a couple of examples and I look forward to answering your questions. So here's an example of very powerful Euro 3-minute, very classic structure. Once again, reminder, enjoy the rally if you know the rules. Stay out if you came to the markets at the end of wave 3. And here's an incredibly choppy structure on oil. As oil is incredibly low liquidity instrument that can be incredibly manipulated. Make sense? And for that reason, it's extremely important to respect the low liquidity instrument. Very, very powerful and very, very critical to respect that structure. Make sense? So on that note, please prepare the instrument and time frame of your choice, and I look forward to answering your questions. So guys, please confirm that you can see the invitation I posted to the trading room. As again, we are going into Alpha Wave Traders Bootcamp as of Monday. So here we are, a few more examples. Google, 5-wave structure, very classic and very clean. Confirms, formula remains the same. It doesn't matter if it's stocks, if it's Forex, if it's hourly or minute charts, or if it's daily, weekly, monthly. And this is the two key components we teach in the course. Pure price for entry and Fibonacci for exits. No software, no indicators of any kind. And if you are posting the question about the instrument, it's very important that you post the time frame, as I don't know if you like me to look on Apple monthly or Apple 5-minute chart, which is absolutely critical to identify which kind of trader are you. Are you position trader or are you day trader? Do you know what price action defines as the wave formation and wave termination? If you do, you know high probability entries, high probability targets, and areas of inherent danger. And that's exactly what we will be teaching in Fibonacci Bootcamp entire month of August. The most challenging months to trade as big money on vacation, liquidity is incredibly low, perfect time to trade various time frames from hourly to 15-minute to daily to weekly. And that's exactly what we will be doing. Double education in very short period of time. We're starting next Monday, and therefore the invite I'm posting in the trading room is only for the next few days. So if you're thinking about visiting the trading room, it's extremely important that you come and visit in the next 2 days, because we will not be reopened for visitors until September 3rd. I see the question about Apple 5-minute. Apple 5-minute. Any other questions? Please let me know. I posted the invitation. Do you see all the links I had been posting in the room? Guys, please let me know. It's posted in the chat section. Can everybody see? It depends on the time frame you trade. All the results are posted on performance page. We have students who trade Forex weekly, and we have students who trade 1-minute charts. In the trading room, I demonstrate the method on range charts for day trading purposes only. So guys, please let me know so that you can see all the links. Alright, so let's go to the questions. You can see all the links. Excellent. Love it. Let's go to the questions. Apple, I have Apple ready. Apple coming up. So I definitely prefer to start with futures so I can set my instrument manager. I don't do the pattern count. I can show you my levels. So since the first question was about Apple, not a worry in the world, Apple 5-minute coming up. No, you plot all of the levels. You learn the 4 critical rules in the course, and those are the levels you plot. We don't give you any software. Your brain is your software. Actually, it's posted by one of my students. So uh, Alpha Wave Trader method is a brainware, it's not a software. So let's go on Apple 5-minute and let me tell you what I see on Apple. We had pretty peculiar formation overnight, but I will show you where you had opportunity to short Apple. So, and then I will show you what has happened and where Apple is currently. So, again, picture perfect reminder of what we teach in the course. If price comes to reversal zone, very bad idea to buy at these levels. This is where you're monitoring for short. Marvelous short this morning on Apple at the market open. Is that clear? This was your short. If you know Alpha Wave Trader rules, you had opportunity to acquire short at this level. And it reached quite a few targets. Clear market in the bullish correction. You do not want to buy at this level, so I'm going to show you where this bullish rally will end, which potentially as we speak currently. So it's extremely important. This bullish rally is over and sellers will step in with vengeance. You do not want to buy Apple here on 5-minute chart. Very, very weak. Sellers are here already. Very weak bullish corrections. So, again, if you were long, you want to get out. It's heading to 94.10 once it's going to break 94.24. And that's a reminder. Extremely weak bullish correction. Once it's going to break 94.24, it's going to collapse drastically lower down. Okay, SPY weekly. I already showed SPY weekly. S&P weekly is what we look in the trading room. Let's bring it up. I have it ready. Let me give you the levels. And again, if you witness all our Facebook posts and Fibonacci levels, price is still heading drastically higher up. So this is why S&P had been struggling so much on weekly. Fourth week in a row. Again, I'm projecting it's going to break this level and head further up. But this is a reminder. Very, very dangerous to buy at these levels. Last buy on S&P weekly was 1700 area if you are trading weekly charts. This is where S&P was giving bearish corrections, doing exact same thing, and potentially will blast through this level to much higher levels. This is S&P weekly. I calculated based on the method I developed that spells out these very important rules, and that's what I teach in the course. You label all the levels based on your rules. Yes, clearly, that's all I trade in the trading room. So let me answer more questions. I already showed where US ES goes, so guys, let me just finish the questions on S&P. As I brought up multiple charts on S&P ES, on NinjaTrader is S&P. I already showed multiple charts on S&P since we started working, spelling out how powerful this level was, spelling out where it's heading next to, showing multiple examples of the trades ES is S&P. So let's take a look and let's see what S&P daily is showing currently. I had shown also S&P monthly earlier, spelling out that this has been shown since 2000. S&P monthly showing 2100 level, but S&P is breaking historical highs. S&P is at the end of wave 5, overextended wave 5, way too late to buy on monthly. Your last buying point on monthly was 1700 area. Way too late to buy. Very, very dangerous to buy on monthly. On monthly, it is 2100. If you're a day trader, price had been in reversal zone since market open. Since market open, that's why it's been extremely sluggish. Don't be surprised if you're gonna see extremely powerful short collapse on S&P in the next few hours. And that's exactly why S&P had been doing this worthless corrections, because this bullish rally is way overextended. Buy on S&P based on alpha wave trader rules 1962, 1964, 1966. We don't buy at the end of the trend. Bad idea. Again, big difference if you trade S&P monthly, you still have plenty of space. Historical highs are being broken, 2000 and 2100 on monthly. Projected since 2009. Alrighty, Euro for hour. Euro for hour. Let's go on Euro for hour. And this is what we do in our community if you would like to keep reading this. We have 3 trading rooms. One room where I demonstrate the method on futures on oil and S&P. Second room for our graduates Alpha Wave Traders Club. If you finish the course, you have another room to go to. And third room is education room where we teach the method. As of July 28th, all the rooms are closed except our education room where we will be doing the Fibonacci bootcamp, which is something I've never done before and something that we have students from a couple of years ago coming back for more Fibonacci. So this is Euro for hour chart. Let's take a look at what played out on Euro for hour. If you had opportunity to short Euro from 3700 area, this was the end of the minor trend. Euro struggled at this level for 4 hours. Pay attention to the bounce that Euro staged when it came to reversal zone. It's all spelled out here. If you know the levels, you know where to expect major trend reversal. Euro is picking up this steam as I spelled out on Euro weekly. Euro is heading all the way to this level, 3400. And there we go. And that's Euro. Any other questions about any other instruments? Please let me know. And I hope everybody is seeing the invitation to the trading room for the next 2 days. It's a final opportunity to visit the room until September, and it's a beautiful opportunity to join us in Fibonacci bootcamp if you will decide to do so. I don't know what is NVDA 60 minute. Is that a stock? I don't trade stocks. I would gladly pull it up. I only have data to the major stocks. And I already showed S&P 1 hour. So SPX is a yes. Is NVDA stock? When is the free bootcamp? The next 2 days in the trading room. Trading is a serious business, the most serious business of all. And the moment you recognize that the rules are the key, your trading goes to an entirely different level. The moment you know how to trade pure price action, you can trade on any platform and any instrument. And that is priceless. So I'm bringing up NVDA for our chart. I'm sorry, what time frame on NVDA? 60 minute. Well, since I already have 4-hour chart, let me show you something. I will show you where the collapse played out on NVDA 4-hour chart. That is very, very beautiful. Here we go. That's 4-hour chart because the previous person requested 4-hour. So, very powerful shorting opportunity and picture perfect reminder. Know your levels. The end of the major trend, respect it. You don't want to buy anywhere near these levels. But since the question was on hourly, let's bring up hourly. Hourly coming up. Hourly coming up. You had a beautiful buy at 1850 on Nvidia hourly. Is that Nvidia video game thing? So this was a beautiful buy on Nvidia right here in this area. Marvelous, spectacular, very powerful reversal. I already answered that question, RR. What does it mean win-loss ratio? Depends on the time frame you trade. You don't take any profits off the table unless it's 1-to-1 for your first target. I already answered it a few times, so let's concentrate on other questions. So let me show you where Nvidia hourly is currently. I've been spending a lot of time with bonds for the brand new strategy I am presenting in the bootcamp. It will not be part of regular curriculum. So take a look what Nvidia hourly had done. It's a beautiful stepping stone. Your first target, your second target. And that's a puzzle. Makes sense? Whoever asked about Nvidia 1 hour? And let me bring in Aussie dollar 4-hour chart. My pleasure, Ronald. And traders, I'm always available. I love speaking with you. We have an incredible community. As you can listen to the audio testimonies on the website, we have students and graduates who are incredibly open, incredibly gracious. And I'm always open for your calls and emails. Here's my phone number and here's my email if you'd like me to call you back. So I see the next question is Aussie dollar 4-hour coming up. Excellent questions. I love your questions, guys. Aussie dollar. Let's see what we see on QQQ. Pretty powerful rally on QQQ daily, correct? What time frame on QQQ? Okay, that's where it's heading to. 98 and all the way to 100. So thank you, traders. Thank you so much. I look forward to seeing you in a trading room. Only Wednesday and Thursday, and if you decide to join us for Fibonacci Bootcamp, only one spot is left. I'm always open for any questions and comments you may have. Feel free to call or email me with any questions you may have. And I look forward to seeing you in a trading room tomorrow. Thank you so much.